Morning, guys. I know a number of you read my update yesterday morning, and what my update yesterday morning noted. I'm going to start there because it's going to give you a little bit of understanding of how I was looking at this. The SPX. I'm going to start there. The SPX is clearly still in a very good uptrend. We've not, I still think today we can test that support for the diagonal. In other words, I think we may see a little more downside follow through. That's what I'd like to see, even just a little bit more. I really would like to see. But the structure that we had in the IWM as it started to drop really was not anywhere near as indicative as quote unquote bearish, shall we say, as the IWM, which is what I wrote yesterday in my morning missive. When I was looking at the IWM, I had a five-wave structure to the downside. I then had a very overlapping structure to the upside. To me, the great majority of the times, not always, but this is why I don't like diagonals. You can look at this as a leading diagonal. It didn't look like one to me, but I don't trust diagonals. Most of the time, the great majority of the time, they're just corrective structures, meaning this should, in the great majority of circumstances, see downside follow through. And that is pretty much what we're seeing here. And this is why I wrote what I did, that I think the IWM has a more bearish immediate structure than the SPX. And that's what I wrote yesterday morning. I still don't have a solid bottom in yet for the IWM as I'm looking at the RTY. The RTY, the futures for the IWM. I mean, I'd like to see us hit at least that 1468 region. But it could even drop a bit deeper than that. What I need to see is, potentially maybe even a little bit lower. It's possible it could have bottomed and it may bottom at the open today. But I really would like to see even the SPX drop one more time. So my preference is to see a little bit lower before we rally back up. But what I see on the IWM is that a third wave will usually target the 1618 extension. If it gets a little bit extended, it'll target the 1764. Look where we topped. Literally, I mean, how many times did we bang our head on that 1764? How many times? Here we go. One, maybe even here. 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, how many times did we bang our head on that 1764? You wonder why the market stops at certain places. Usually there's a strong fib that's sitting there. And this is where this third wave topped, right on that 1764. When you top in a third wave, you usually come back and you pull back in a fourth wave back down to the 1.0 extension. Because we went beyond the standard target of the 1618, it's possible we may not get all the way down to that 1.0 extension. It's possible because we went a little further than the 1618. And if I look at it from a overall retracement standpoint, let's take a quick peek at that. Yeah, the 382 retracement is at just under 146. Just under 146. I'm not going to expect this is going to get below 144.50. 144.50 is probably 144 to 144.50 is the max I'm willing to accept on this move down. The max. Let me see where a five-wave structure would take us to. Bear with me. I would say 144 is the max. 144 to 144.55 is the max I would expect on this drop. Max. But below 143.75, and that would start telling me that we have topped in a truncated fashion. Not my expectation, folks. Truncations are quite rare. You don't see truncations very often. My expectation is that we still go higher. This is my target now for I'm looking for one more rally. And the SPX pretty much is showing us, the same thing. As long as we hold this, I'm looking for one more rally. Does this rally take us to here and then pull back and take us up one more time? I can't tell you that yet. But as long as we're going to hold over 2570 and the IWM is going to hold over that 144 to 144.50 region, I can look at this and say, I'm looking for one more rally. And the heart of this move down seems to have already occurred, which means we're probably only in the final squiggles before this quote-unquote based upon most of what I'm looking for. I just don't have great confluence in the IWM as to where it really will bottom. That's why I gave you a general target region. So ultimately, if we break below 144, I question my perspective. But as long as we remain over 144, I'm looking for 152 plus on the IWM. And I think that probably has the most potential out of all the, from a percentage standpoint, that looks to be the biggest potential out of all the charts we're looking at right now. Okay. And again, on the SPX, it would look better with one more drop. It really would look better with one more drop today. Okay, let's look at the metals. The metals are beyond a mess. Silver had a gorgeous setup, and I cannot say that silver is thrilling me at the moment. I'll be quite honest. I posted yesterday that we have to get through 1739, 1740. Why? Because that gives us, this would be an A, B, C, and that would be where C would equal to A. That's usually what you have to look at as a resistance points, the points where you only have an ABC rally. Right now, to me, all I'm seeing is a lot of overlapping mess. So it's possible we're going to get all the way up to that box up there, but it's going to be in what we may call an ending diagonal. Again, diagonals are not something I like. Diagonals are not easily tradable, and they're actually quite ugly and difficult. But the potential exists that this turns into a diagonal and that we don't get up to our target until the end of the month. I mean, it's hard to really say. I don't like diagonals, folks. My preference is still to get up there. As long as we do not break back below 1630, my preference is to get up to there. But I will tell you, this is ugly. This is ugly action. And it just really reaffirms my expectation, at least for now, that the rally we're getting is still likely, not definitively, but likely only going to be a corrective rally and will lead to further downside in the coming weeks. That's really what it seems to me. Now, yeah, we've had a lot of diagonals of late, and it's not typical. But for some reason, just a lot of diagonals of late. I even have one in the dollar I was following on the micro. So we're seeing, I think it goes to a lot of indecision of late in the overall market. Let me go back to the ABX chart because that's really what's going to give me a lot of good guidance. The ABX chart still looks like it needs that lower low, but it may have come up short. Where this rallies to next is what's going to really set the tone here. If this rallies all the way up to the 15 region, 15, 14 or so, that means that this third wave may not complete until early December, and it's probably gonna see an extension to below 13. So if we now rally all the way up to the 15 region, you may want to take a little short trade on this with the 13 region as your target. It would be a nice little trade, and you stop out just over 1530. That's how I would look at it. even 1550. But that's how I would look at that if you wanted to take a trade on that. It seems like a nice setup. A lot will depend on how high this goes. I'm trying to figure out where this 3 will bottom, because where it stopped, yeah, it's possible that that is the bottom of 3, but that really is a very, it didn't reach the extension that it really should have for this degree. So I'm still in a little bit of a wait and see mode. But the fact that GDX is now, AVX is now approaching the region of its 3rd wave, or possibly, has to make me keep an open mind about the GDX and where it's going to bottom. We're not out of the woods yet by any stretch of the imagination, folks. We are not by any stretch of the imagination. So as long as we remain below 24, I would seriously consider you either lighten up or you maintain hedges on your portfolio. I would seriously consider that. I would strongly consider that. I would strongly urge it. The market still is in a position that it could break down much more than people may expect. So I'm going to maintain an open mind that we may not be able to break down. But again, a lot depends on how this rally can, if it can at all, continue. So the bigger the bounce, the more likely we may not see a bigger breakdown. But for now, we're not out of the woods, folks. The metals are nowhere near out of the woods by any stretch of the imagination right now. Okay. The dollar. Dollar came within pennies of the target that I had for 5 of 3. But look, also a diagonal. Overlap, overlap, and then we went back up. This to me looked like a diagonal. We've now come down through the channel. This is suggesting to me that we're in 4. And I still am looking for one more push, potentially just over 96 before this completes. And then I'm looking for a bigger pullback down to the 93 region. Outside shot of a lower low, but I'm not counting on a lower low anymore on this. I think there's a strong indication that the low has been seen, and I think this is just a big A wave rally, and I'm going to expect once we complete this, or either we complete this, or you see a breakdown below 94 first. No. A breakdown below 94 tells me we're already in the corrective pullback. My expectation is still for one more 4-5. Okay, here's the biggie. USO. USO, I gotta tell you, this is the first time it has had a breakout over this MACD channel in 8 months. 8 months, folks. 8 months. Do I look at that as a false breakout? Hard to, because it also took out the 1130 resistance region. To me, that means that this is suggesting that it's going higher. Minimally 1250, but it looks like the 1330 to maybe 1350 region has some strong potential on this as well. So ultimately, as long as we hold over 11 on pullbacks now, I think you could see a couple of bucks higher on this. At least a buck higher, but I think you could see a couple bucks higher. And it's, in my opinion, this is just a bigger corrective rally. I think you're probably going to come down again on it. Okay? But I cannot fight this when it took out 1130. Just too much. I think this has now, again, as long as we stay over 11, I'm looking higher on this. Maybe I'm going to get whipsawed here. But like I told you guys, I don't like trading patterns that are not clean and that are very overlapping. They don't give you a lot to work with from a general structure standpoint. But at the same time, I recognize it's not something I can fight once we took out 1130. It did, like I wrote over the weekend, Jason looks like it may have a target of 1250 or higher right now, as long as we hold over 11. What else? Is there anything that I missed? Anything that I missed, folks? I think we got everything. So let me throw it out. Anybody have any quick questions? Okay, before I go through anything else, let me just give you my bigger perspective on the daily chart. I mean, I think my daily chart is pretty, I mean, it's pretty self-explanatory. I still think we can push a bit higher. As long as we stay over 2570, I think we can get to the box. But once we get to that box, I think you need to be on high alert. Either a break of 2570 should get you on high alert, or when we get to that box, you should get onto higher alert. And we're still going to need to take out 2520 before before we can assume we're in the bigger 4 to 2300 to 2400. GLD. I mean, like I said, when it comes to the metals, guys, it's a big mess. I really don't have anything that I am confident of within this region. And like I said, there are going to be times in the market that, you know, the crappy structure does not give you a lot to go on. Right now, we're in that crappy structure. My preference is to still see a rally in the complex. But in no way do I see anything that is telling me we are ready to break out. If anything, you know, at best, you see the green count on this chart is the best, is the best scenario, the best case scenario that I see at this point right now. That green on, in other words, if we can rally back up towards the highs, like I showed in silver, I think your best case scenario is going to be this green chart. If we are not able to, and we retain ourselves below that high right here, that opens up the door to get all the way back to 107 to 110. That's pretty ugly, isn't it? So, you know, I'm very, very, I don't know how many more times I can say this. I'm very cautious in the metals complex. You'll know when I'm a bull. You'll know when I'm a bear. You'll know when I'm cautious. My bigger perspective is bullish. My intermediate term perspective is open-minded, very, very cautious, and definitely hedged. Does that explain how I'm looking at the metals? I don't have anything I can absolutely sink my teeth into and say, this is the setup. Rather, it's pretty ugly out there. I don't have anything that is giving me any solid guidance. And this will happen every now and then. There'll be times I'm not going to have anything solidly to go on. You know, for those of you that have followed, me over the years, you'll know when I have a strong feeling one way or the other. And I'll present that. And I'll also present to you where that strong feeling will invalidate, and you'll get that. You'll know that up front. You'll know where I'm wrong up front, because we'll break down below a certain level if my bullish thesis invalidates, which is what happened in September. Right now, I think I don't see anything that is telling me we are immediately breaking out. So what does that mean? It means you remain cautious, and the market's not going to run away without us right now. I don't see anything that's telling me the market's going to run away without us. What's the setup I'm looking for to tell me that the market's about to run away? It's a breakout over 24 in an impulsive five-way structure, taking us back up towards the highs, getting a corrective pullback, and then we're off and running. Until I see that setup, guys, I am very concerned about the bottom dropping out. Any other questions? Do I have a BK bear suit? Oh, I don't follow BK. Guy's always so wrong, especially about gold. Very few of those guys have any clue about gold. Okay, well then again, I don't have a clue about gold right now either. I'm trying to just figure out which way it wants to head. It is just an overlapping mess right now. But okay, any other questions, ladies and gentlemen? I would love to see us getting up to here, because I would attempt a nice little short trade on this. I would get a little more aggressive on the short side, because I'd have a very defined setup. I like defined low-risk setups. I really do. I don't have one here. It's a mess. So take me higher, guys. Take me higher. I'd like to get a nice low-risk setup. Okay, if there are no further questions, I will catch you guys next week, and I'll see you in the chat later today. Enjoy the day, folks.